Down almost 1%, albeit on very light volumes. Is everyone still on school holidays?
It does look like school holidays. Last Thursday, Friday, we failed to crack that $3 billion mark. And it was the same today. We only saw $2.7 billion worth of stock going through. So a quiet day in terms of volumes and in terms of money going through the market. But big on action, we saw Iluka shares down by a massive 24% on the back of that production downgrade. We also saw gold stocks being sold off quite hard after gold in New York closed at 1,584 US an ounce on Friday. So Newcrest mining down by 2.9%. In fact, most of the concern were around those mining stocks, and that's understandable given the concerns around global growth at the moment. So if we have a look at some of those stocks which made 52-week lows today, they were the likes of Iluka, which wasn't surprising, Sundance Resources, Nexus, Integra. If we have a look on the flip side though and have a look at those stocks which actually saw 52-week highs, these were the defensive stocks. We saw Telstra reaching a 52-week high today, so it continues to perform well, and Spotless Group also hitting a 52-week high. In fact, if we have a look at Telstra over the last 52 weeks, this is a stock that's now up by 26% in terms of its share price. Once you include the dividends as well as the franking, it's up by a massive 34%, so continuing to do well. On the market today, Telstra was up by 1.1% and Coca-Cola Amatil gaining 1.5%. So altogether, defensive is very much in favour, but anything related to global growth really out the window today.
Slightly aside from the argument about industrials and resources, what about the banks? An interesting article, the chairman of Westpac was quoted as saying he still thinks the banks are a good investment option. They're not simply a utility, a store of wealth. He does see capital appreciation. Of course, the chairman of a bank would likely say that. I mean, would you agree, or do you think there are better stores of money, if you like, better investment options out there on our market?
Well, I guess it comes to the heart of how banks make money, and if you're focused domestically, a lot of that comes from mortgage growth or the housing market as well as business growth, and a lot of that is being driven by this perception over Europe, and that's a cloud over not only the industrial sector, the material sector, but even the banking space as well. The banking space has much more attractive yields compared to the materials and the mining space, but if we have a look at where earnings is being driven from, well, you have to see that there is an impact from what's happening globally, not only in terms of the demand side, but in terms of the cost side. And we do have earnings season coming up. What's going to be closely watched is the net interest margin by the banks. And this is probably likely to continue to come under pressure. If we have a look at some of the numbers coming out from around the region, once again reinforcing the shaky nature of global growth and the impact that Europe is having in terms of global growth, I think the China CPI numbers were almost a non-event, coming in on expectations at 2.2%. The market was expecting 2.3%. But really where the shocker was today around the region was in Japan's machinery order numbers. Now, it was expected that these numbers would show a decline of 2.3%. We actually saw a decline of 14.8% month on month. Now, we didn't even see this type of decline after Fukushima. So showing exactly I guess the impact that Europe is having around the region, and these Japan numbers were really a wake-up call around the region, plummeting by 14.8%. If we have a look at machinery orders, they are a very strong indicator of business confidence, because businesses won't have that capital expenditure unless they're quite confident in terms of demand and in terms of outlook. So that was a big wake-up call around our region today, the Japan machinery orders. And of course that comes out of some key numbers coming out of China later this week, and of course we saw that surprise interest rate cut from China, so a lot of speculation that those second quarter GDP numbers may be quite soft. The consensus is at 7.5% at the moment, but of course if we see around that 7% growth, that's a hard landing for China.